Welcome to this discussion, which is uh, at a critical point, I think, in the market after it's had this wonderful 2 month long run. Wonderful for everyone who's participated, not so wonderful for those who sat it out. People who can't think of going both ways is also sometimes a problem. And it's really amusing how the reason I thought of this is the way different comments are coming up on each of my posts. Initially it was people wanted to comment on other people's opinions, so that is the interesting part. So if you put out something bullish, they wanted to compare it with somebody else who's bearish, and then somebody else who's bullish with somebody else who's bearish. And something like that has been happening for a while, and it happened again today. And so I said, why not take this up? The idea is not to get into a bull bear fight, uh, but to really understand the dynamics behind the entire thought process. Not everyone is familiar with my work, though many people are. But my approach to the markets, for those who don't know, while it involves charts as an important backdrop, uh, does also include putting that together with everything else that is happening in the market. And that is why I call it complete market analysis. If you really not looked at the fundamentals, technicals, economic backdrop, the macros, the business cycle, both at the long end and the short end, and not viewed the market from that perspective, you can really get lost in terms of what should be your view now, and why should you change it or not change it based on what factors. Purely, if you're a technician, what you're expected to do is that if the market goes above a certain level, you're supposed to change your view. So if you said the market can go up to 17,800, then come down, which means above 17,800, you're supposed to turn bullish. Now, that is very typical. And that kind of typical analysis would be the case if you did not have any other way of vetting what is really happening in the underlying market from various angles, whether it's looking at sentiment. My way of looking at sentiment is really to study the market's data across the board. You can't really look at market data based on the 5 people that you're speaking to or the 10 people that you're speaking to, which is how a lot of people make that judgment that this is what everybody's doing. Everybody's bullish or everybody's bearish because the 5 people I'm speaking to are in that mode. And there's enough data points to really look at that can allow you to judge what is really happening, whether it's the options data, the FNO data which is coming out, the position, the market participant data which is also there. All of that can actually make it really, really interesting in terms of how you view where the market is. You can look at breadth, market internals. You can look at futures premiums, discounts. One of the things which you don't look at, and I don't look at, is the day-to-day buying and selling in the cash market by FIs. That is the most useless data you can ever look at. And so, upfront, I'm saying don't ask that question. It's a waste of time. Why were they selling earlier? Why are they buying now? Really has no meaning if you understand that transactions are behavioral at large, and then net, what you're really reflecting is the mood of the market. And so, what you really need to be studying is what is the mood. Another thing which really goes offbeat, and I don't know, I don't see many discussions on this in India. Most of the video spaces or other discussions related to the US that I've been listening to go so deep into macro analysis, looking at what the Fed is saying, what is the policy stance, and how it's going to impact earnings growth or GDP growth. And somehow that kind of discussion never really comes up in India. Not sure whether it has to do with the way the industry is structured. Everybody who's studying fundamentals is on the long only sell side analysts business. There's very limited independent analysis that is published and circulated and openly discussed. So that sort of just has not developed in India. We just go back to the four big speakers. If you go by business media, just the 4 or 5 people who should probably speak about these things, but you don't really have an in-depth discussion on all the factors and how they are counteracting with each other out here. Now, of course, India is also a different destination because somehow, whether it's been through bull and bear markets, bubbles and busts, we continue to have GDP growth. We have a demographic profile that somehow keeps inflation coming, which sort of helps elevate markets, and therefore, uh, uh, while we can always justify why it is a good long-term investment, what we miss out on are these interim cycles, which are then driven more by liquidity. So liquidity therefore becomes a big factor to really study, whether it results from excess leverage or the decline of leverage, or whether it results from global equity market flows and sentiment that now we are connected to the rest of the world. So again, it leads to studying multiple factors on that front as well. And so having a good understanding of what's happening around the world definitely helps in getting a hook on what the liquidity cycle in the markets is, and how that will impact the stock prices irrespective of how they are doing fundamentally. Because yes, in the long term, if you take a 10-year 15-year time horizon, if a company is particularly doing well, it might continue to grow. But in the interim, you end up getting these big pullbacks despite good fundamentals, simply because of the liquidity cycles inside the market itself, whether they are because of global flows or whether they are because of excessive leverage in the domestic market that is sometimes built up. We had that in the old days through the Badla system, then through the FNO system, margin funding through brokers, and so many different forms that it has taken up, including corporates, borrowing money from the banks, which then started to get reported after 2008. So to what extent have they pledged their shares, etc., also started to play in terms of the debt cycle. But again, these factors are far much ignored by the participants because it's not in their interest. So that is essentially what I end up publishing in most of my work at India Charts, which you probably read on Twitter and other social platforms, and try to get a perspective of what is really happening and where the market should head from here. Because even if there's a more than 20-30% decline that I can see, then I think it's a relevant decline in the market that one should really pay attention to. And so that is sort of my thought process on this. So having said that, let me get to the topic itself, which is, has the bear market really arrived? What do we think so? Do you think so? Yes, no, why, what? It can become a discussion. I have my opinion. I think, and a lot of this opinion is also based on a judgment of both the extremes in the market in terms of sentiment and how things are moving in terms of liquidity. So that requires looking at all the moving parts that go behind it, which is sort of what I tried to explain also in great detail in my recent money control post. And there have been a lot of back and forth, comments on it. So what has really happened here is we've had a great run. I think post COVID, simply driven by liquidity. Sure, growth has been there in certain sectors, and those sectors from a 10-year basis might still be good. So you'll never look back at things like energy, power, EVs, these sectors where you're seeing growth, but also those which were consolidating for a 10-year period, whether it's in places like capital goods, power I've already mentioned, realty, and so on. All of these went through long consolidation phases over the last decade. In other words, between 2008 and 2020, many of them were flat, very similar to what they did in the 1990s. And then they came out of it at the fag end, which was partly helped by the tech bubble, which is where many of those stocks actually made their first waves. But then all of that got given back for the very same reason that I mentioned earlier, which is a bear market driven by excessive leverage and credit, specifically in the Indian market. It was a complete unwind of the debt system in the markets, which funding system, which was the Badla system, and then later ALBM introduced by NSE. combined, which had some 30,000 crores of shares floating in the leverage market, and the hidden leverage, which nobody really talks about. Surprising till date, nobody talks about it. And if nobody knows, I would be surprised that that the market or publishers have been so ignorant of it, which is that the NSE introduced a separate system of settlement relative to the BSE. So BSE used to be Monday to Friday. The NSE introduced Wednesday to Tuesday. Now, when you think of that different settlement system, you may think, oh, this is just a step towards competition. What it actually ended up doing it is actually fueling the excessive credit and borrowing of stock blindly from the market without any margins. And for those who don't know how that happened, it's very simple. When you have a 5-day settlement, the BSE settlement would end on Friday. If you didn't want to pay margins, all you had to do is sell your stock, your forward stock, which is you are carrying forward without paying any margins on BSE, square it up, and simultaneously shift that entire position to NSE, hold it till Tuesday. When NSE asks you for the money, shift it back to the BSE. Now, if you simply did that, you would never have to pay any margins, which means on a zero margin, you could buy any amount of stock. And as long as there's a bull market, you get a free ride on the market. If you think that was not happening, it would be foolhardy, because in 1998, the arbitrage between BSE and NSE amounted to 1% per week, which is essentially caused by this shifting cost. So in other words, you could lend money freely to the market at 52% per annum. That is the borrowing cost for anybody who's doing this shifting operation. So you can imagine that what exactly was going on at the end of the operations of Ketan Parekh and others who were probably holding up the market at that point of time, theoretically speaking, if proven or not proven. But I would believe that people would have used that system, if not KP, but many others individually would have done it. And as arbitragers at the desk I was working, we were able to, generate a 52% per annum for our clients every week, free money, 1% coming in. And then I would tell my brother in the US who was studying in his MBA at Berkeley, and he would say there's no such thing as arbitrage according to his class. And so that's the beauty of Indian market. So you get huge leverage. It develops in some way, somewhere in the system. And that caused the downfall of 2000. Apart from that, it was the tech bubble. The leverage really added up to it. So we got that. And then we got the actual bull run in India with growth and other things happening. Many of the sectors that had consolidated picked up again. And I see a lot of mirror of that in the recent episode that we've seen post-pandemic. A lot of these sectors breaking out, and now we are going through this downfall, which is essentially driven again by something which is more global, like the tech bubble back then. And we can all debate as to where the leverage or where the credit and money is. Is it all driven simply by the US? Is there something domestic? A lot of the margin funding in India is considered to be low beta this time. And so finding the source of domestic excess is a little difficult for people. And so all the fingers end up pointing to what is happening around the globe. And so if you study what is really happening around the globe, nothing has really changed between index 15,200 and index 18,000, which is why US indices have really not retraced more than 50% in what technically still looks like a corrective rally. This entire rally being driven more by sentiment, which had reached the most extreme since the pandemic, not just on Indian data, but even US data. There were so many data points that were floating around in the month of June showing that people had become the most negative since 2020. So that sort of was a good backdrop for that rally, and that is sort of what happened. And specific to India, it ended up being even bigger, probably because of that lack of underlying excess at that point of time. And the pendulum is probably swung from extreme negativity to extreme positivity, and that's based on just the not just the commentary or the people that I speak to, which are definitely people calling me up and trying to convince me that this time it's actually done and you should be bullish for 19,000 and 20,000. My answer is very simple. If we are really going there, it doesn't matter. You can buy 500 points higher as well. Psychologically, for a lot of people, that kind of a decision is very, very tough. They feel that if I get out now, I'll never be able to get in again, which is nothing got to do with anything but mental training. So if you lack the mental training to do that, then you'll always be stuck. But if you really have to take a decision based on a multi-factor model, which means you'll be looking at what the dollar is doing, what commodity prices are doing, uh, uh, what is the Fed really up to, what is happening? Are US earnings going to really grow over the next 2 quarters? Is the worst over? The answer is no. Earnings are not going to grow. Is the dollar really going to go down? No, there's no trend reversal in the dollar. Are commodity prices rising or falling? They're still in disinflationary mode, which means they're still falling, reflecting the weak demand rather than just the offset which was caused by Russia. I think the only place where that is still showing up is gas prices. So you actually see NG hitting a new high. For those who didn't notice, natural gas prices have actually poked through the previous high from where they'd sold off when oil prices sold off. But oil prices have actually not gone back there. I thought they would have actually, but so now oil prices are really reflecting the general disinflationary trend that we are seeing across commodities. And uh, that to me is signals. I mean, if you just look at the rising dollar, weak commodity prices itself signals that the liquidity condition is still one of tightening and not one of easing, as people would like to believe, by simply by looking at a stock market rally. And if that is true, as long as that is true, then the odds for this rally to really keep running its course at higher and higher valuations, irrespective of which companies are doing well or not doing well, the liquidity factor is really not supportive of the markets as of now, and so that is a risk to really price in and see. And so we are looking at our own proprietary momentum indicator, which only gave a sell signal on Friday, 2 days ago. And the moment that happened, and it happened at a peculiar point in the technical charts, which is the Nifty 500 simply touching the trend line of the last two highs. I think I posted that yesterday. And the moment it touched that and sold off on Friday, indicators all started to signal sell. And you already had, I think, a couple of weeks of negative divergences in the breadth, which is the market internals. You already have the put call ratio, open interest going back to where it was in January. And based on those data points, you've gone from one extreme of the pendulum to the other extreme of the pendulum. So that is how I look at it, apart from maybe the few people who are trying to tell you that, this time maybe the worst is over. My answer is let the market decide. Let the data points change in terms of the liquidity factors that really were driving it down in the first place. And if that has not happened, if that is not happening, there's absolutely no reason to change the view that all the moves that we've seen over the last 6 months are bear market rallies. Now, the last argument which I got is that bear market rallies don't end up retracing so much. You have an 80% retracement, something which has really not happened. And if then how do we really classify this? The answer to that is markets are never constant. They follow a certain pattern, but sometimes the pattern changes, and you need to adopt and be able to visualize what that change really is. For example, if we actually go back to maybe 2008, 2000, yes, it's true. Most bear market rallies ended at 50% retracement, which is what the US indices are doing right now. They sort of had the 50% retracement mark for the S&P. Nasdaq came very close, but couldn't cross it, and those very much fit that narrative. But when it comes to the Indian market, we actually did something very, very different between 2018 and 2020, where all the three tops close to 12,500 occurred at a time when the broad market was actually declining. So if you're actually in mid and small cap stocks, you would have been tarnished through that phase, and it was difficult because I had a bearish opinion throughout that period, and even prior to that period, which and the index wouldn't really fall, but stocks would keep falling. So you could be right on stocks, and people would come back and say, well, the index is still up there, so what's the point of your view? And eventually it only took the pandemic to cause the final sell-off. So big retracements, I think, and this long duration distributive phase is something that we saw probably between 2018 and 20. For the first time, part of the blame went to changing of index components on a regular basis by the regulators or the managers of the index. They would be changing one component or the other every few months, and so that ensured that the weak components were thrown out and the index wouldn't be allowed to fall. So we can sort of come up with a conspiracy theory if we want. But having said that, that's just a pattern that the market has followed, and I think we've seen a lot of rotation through 2020 and 21. Every day or every week, there are different sectors that are pulling up, and that has helped the market hold up. even though there are many others that have actually rolled over and gone lower. And so that sort of creates confusion. So at each of the highs that we've seen back to 18,000 over the last 8 months, there are very different stock sectors which have actually made a new high. Some of them have not made it again, and there are others that did. For example, the IT index made its peak in January. After that, it's really not managed to come back as much. The metal index peaked only in April, and it's far lower than that now. The PA index, mainly driven by the Adani Group, has made a new high. If you remove that, probably it wouldn't have. And so there are many others. The PSU stocks, for example, made some kind of a triple top, the PSU index, and then it's still around there. So it's really not sold off in a big way because of the energy stocks that are part of the PSU stock component, and energy stocks were doing well because of elevated oil prices. So different reasons, different sectors held up at different points of time, but many others have weakened and not really made it back. And that is how a distributive process really goes on. I recognize the distributive process, I think, only after April, simply because metals and commodities formed a larger part of my tracking basket. And so even if the dollar was rising, as long as commodity prices were holding up, I was being ignorant of the dollar rising, because finally it has to impact your portfolio to give something importance. At the same time, the view was that the dollar is in a long-term bear market. That view got violated because I thought I had predicted from 2017 that you're in a 7-year bear market for the dollar. That would have meant 2024. But here comes 2022, and you surpass the 2020 and 2017 highs, which was like a double top around 104. And once you did that, it sort of changed the entire situation, because you had to look at this 4-year period or 5-year period as a consolidation in the dollar rather than a bearish trend. Now, within the consolidation, definitely the impact of the bearish trend played out because you got a significant rally in the underlying commodity prices and stocks. But now that you've broken out, what it creates is one more round of selling in that sector. So that entire reflation theme is being pushed back by rising interest rates and the rising dollar. Something which will eventually change, but till it does, we continue to remain in a disinflationary mode. And I think that recognition happened for me in April. And so from there, all the way down to 15,200, and then turning bullish, essentially mainly as a technical stance that the market became too negative. And now the same opposite of that at 18. Well, we didn't cross 18,000. I think we did around 17,950 or something like that. Which is almost 18,000, and the pendulum reaching the other end of the spectrum, where a lot of people simply giving up on the bearish stance, and the market showing that those indicators rolling over. So simply waiting for that, which is where the patience comes in, and I think that has already happened. We already seen the first impulsive decline in the market over the last 3 days, which signals to us from an Elliott wave perspective that a trend reversal is already in force till there is fresh evidence to the contrary. Based on all these factors, I consider that we are still in the bear market that started in October of last year or January of last year, wherever you consider it. Typically lasts for 15 to 21 months, which means somewhere into March of 2023 at least. And the worst phase is not behind us, but actually lies ahead of us, because from a global backdrop, the US market is just starting what we are calling wave C down, which is, at least in the last 2 occasions, been an extended decline far larger than what we've already seen. And that would be triggered by an excessively, rightly or wrongly, hawkish stance by the US. Something surprisingly very similar to what they ended up doing in 1928. If you've studied history, they raised rates, markets fell, they bounced back, they thought it's okay, and they continued to raise it at a time where people were excessively leveraged into equities. And that eventually cracked the market hard enough for it to go into a tailspin. Now, I'm not saying the same will happen in every way, but at least we're at a point where if they don't really turn meaningfully on policy and tightening, two completely different things, QT and interest rates, two different things happening. The US is really heading into a significant decline. I think most people will underappreciate or under-recognize the coming decline and the scale and size of it, including me. Any targets or any levels I've given may be broken. They are just there as a goalpost or a signpost of direction. I will not be surprised if they break. If they don't, I'll consider myself lucky, and I'm sure at that point we should be able to judge that things have gotten far enough, bad enough again on the other side. But that's where we think we are headed. Unless there's serious proof that something has changed, I'm prepared for the worst case scenario right now, as at these levels in the market. And so, with that opening round of discussion, I can actually leave it for other people to comment on it, discuss it, or ask questions. The floor is open. Chavan.
Yeah. So the fact finder can come in here if you want, if he wants to put in some points.
I just wanted to, can you guys hear me?
Yeah.
Yes.
Yeah, I just want to ask Rohit. India obviously has been a very different market in the way it has reacted. But what I found interesting was that even despite this big rally, which I term as bear market rally in India as well, the rupee has remained fairly weak, right? Typically, one way to call this a bull market rally, you've seen significant currency appreciation. That's not happened this time. So when you look at, since you're a technician as well, when you look at Nifty in US dollar terms, or say the MSCI India in US dollar terms, which is the US dollar index, what is that showing in terms of rally? I mean, or is it does it also fall in a construct of a bear market rally?
So now you've asked for it's a very big data point when we look at the index long term. Okay, so that in the sense of the economic cycle, which I call the quantitative cycle, and I've applied that to India. I have 3 reports on it at India Charts for anybody who's interested. There are 3 ways to really measure the long wave. The 3 ways are: 1, you can look at a currency adjusted index; 2, you can look at a inflation adjusted index; and 3, you can look at a gold adjusted index. So these are all 3 that I've been tracking for a long period. The currency adjusted index did not break out to a new high above the 2008 highs. Only in 2021 it finally did that in this post pandemic rally. So you had multiple tops at the same level, which means in currency terms, the Nifty was really not able to make a new high. So it was only doing well. I mean, this was one of the weakest bull runs, if somebody wants to call 2008 to 2020 a bull run. It was one of the slowest advances in the index that I have seen, because historically India, being a growth market, has always rallied much faster. You've seen indices double in 6 months at times, or at least in a year. And this was in between 2020 and 2010 and 2020. People got used to the idea, well, the Nifty goes up 10% a year, like it's some defensive market. So basically it couldn't beat inflation, and it couldn't beat the currency either. So the currency weakened to 69 in that period. It didn't beat that. In inflation adjusted terms, we actually saw the Nifty or the Sensex go down between 2008 and 2020. And by down I mean making lower highs. And we've only broken out of that and gone past those levels in 2021. So breaking past these levels was an interesting sign of a long-term reversal in that trend, which means if 2010 to 2020 was, say, a kind of economic winter where you had the banking crisis and banking debt that had to be unwound and written off, that part of the story is sort of done. And we are now attempting to break out of that and start something new in terms of a new bull run. What we are really facing, though, is the headwind from the global, because we are part of the world, and so we face this headwind from the world, which we might not really be able to overcome. And so that is affecting us in many different ways. So in terms of the dollar index, the breakout might end up looking like a false breakout by the time this ends, because not only the equities look like they'll decline, but the currency itself, which is USD INR, is likely to head towards 85, and that is like the starting point. It could be more than that. And what I thought, so during the bull run even of 2020, I thought the USD INR had probably ended its fifth wave and would go back to maybe 68 or something like that. It didn't happen. Every rally, the same thing which you're seeing now was happening even during then. Every rally, the USD INR was not able to fall below that 73, 72 mark. It just started to form a base rather than go down. And now after that, when markets are weakened, it started to make new highs. So which completely changed the perspective from saying that, okay, you've ended something, but you're actually, extending this into a much larger run on the rupee. It may not become the weakest currency in the planet, but it does mean that we have a long way to go to get weaker before we get stronger. And so it changes the perspective that it is topping out to that it's still in a bull run that will last for another year or two, who knows. So you have a weak currency, which, as you said, doesn't point to a bullish market. But every time the currency pauses, it does give the markets room to bounce back, which is what you saw, I think, between June and July and August. I think from that extreme of 78, 79, you went back, you lost you gave back a rupee or two, and that sort of allowed the markets to run. It may not look like a lot, but that's just what happens. I mean, even when we went to 69 in 2013, moment we stopped going above 69, the USDNR remained below 69 for the next 2-3 years, which was enough for the Nifty to really break through the 6,000 mark and go all the way to 8,000-9,000. So whenever there's stability in the currency market, surely it's good. Right now, we are not seeing meaningful stability. I think there's still more room for the INR to weaken versus the dollar.
I just want to add one point there, Rohit, is that the way I look at the INR is the entire construct of the INR has changed post 2019 when the RBI went ahead and changed the policy in which they, maintain capital within the RBI, and they have every incentive to allow the rupee to depreciate by at least 4-5% a year, because that helps them to pay dividend to the government of India. If the rupee remains stable, RBI will actually make a loss, and that's something that they don't want to do. Because the government would like, the RBI to keep giving them a decent dividend. The best way I track this is the big change in my view that happened was, and it's easy to track, was go back to January of 2020 or say March of 2020 and look at how much M3, monetary base of India expanded between March 2020 and March 2022, and compare that to the GDP growth between those two periods. If I recall, we've seen almost a 30-35% growth in M3 when our GDP barely grew. So that, in my view, is something that I would track, as far as what RBI is up to, whether they want the rupee to depreciate. They will want the rupee to depreciate, no matter what.
Yeah, so the way I looked at it, and I think I read what you just mentioned, maybe on your post or another one, that RBI would like it to weaken. I think you mentioned that today, but the other part is that they also want it to weaken, which is they want volatility to remain fixed, which is that it should only go down by a certain amount, or not too much. But there is a limit to being able to do that. Some people are presuming that they're sitting there willing to throw $100 billion at the market and not allow it to go above 80, which completely makes no sense. And the real thing is that as long as they could throw money at it, they probably did. The first signal to me that they are backing off from throwing money at the currency market was in May, when they raised rates abruptly. So moment they started raising rates, it was the first sign that they're giving up on the fight against the dollar. Now they want to now use rates as a fight against the dollar. They don't really want to throw currency at the market. Now, most people don't understand when I say that, but that's how I see it. And so moment they did that, I was pretty clear that the trade on being long USDNR again has really started, and that's sort of one of the positions that allows me to also maintain the bearish stance on the market. That as long as this currency is weakening, you're not going to get a runaway market. In fact, it could also affect flows. I mean, people are not thinking that it could affect flows at some point of time.
Okay, Rohit, there's a lot of people who are complaining about the sound issues. Is there anything we can do right now?
Are you able to hear me?
Yeah. Srinivas,
So people's sound issues may be very, very personal, nah?
I'm not sure. Srinivas, are you able to hear him?
Yeah, I can hear Rohit very clearly. and FactFinder and you.
I can hear very clearly.
Okay, perfect. So let's continue. Okay, Srinivas, you can take it up if you have anything to ask.
Yeah, Rohit, how do you see this Fed? Somewhere, in a way, we're all playing the Fed in some sense. So this Friday meeting last year, obviously he said transitory, uska izzat utar gaya hai. Now, my take is they have been trying to do a controlled demolition of the markets because
Mm.
they can't afford another round of QE because of 5 trillion or chapega. Then even Zimbabwe will stop using the US dollar. So, how do you see this play out short term, next 1 month, 2 month, 3 months?
So, from whatever I am reading, what I understand is that they are really not going to be able to back off from the tightening cycle because the employment data is going to, which is essentially feeds into what is called as wage inflation. So, what they really don't want is wage inflation, which will put more money in the hands of people. The spending that comes with it keeps creating demand and putting pressure on the supply bottlenecks that have not completely been resolved and not going to be an easy resolution. And so, if you really want, and inflation's really therefore not going to come down like vertically. It's going to go like 9. Now it's at 8.5. Then it'll go to 8. Unless it by the time it comes back to even a 5, it is going to take several months. And till that point of time, policy direction, if not the rate of change of policy, at least policy direction is going to remain the same, which means they're going to keep advancing rates, if not at a high pace, then at a slower pace. And so that doesn't change the liquidity perspective, which is that liquidity is really going to be a problem area.
Okay, thanks.
Okay, Sharadji is here. Sharadji, namaste.
Namaste.
Yes.
I have a question, Rohit, about dollar index. You were very bearish since 89, 90 and until now. But I don't see any importance of dollar index. Because on one side there is euro, which is being decimated. So natural corollary is that dollar index will go to new highs. So how much we read in dollar index, I don't suppose it's of any relevance now. You agree or you don't agree?
So while the dollar is a made up of these main currencies, the most significant, of course, the euro and the yen. What the key really, why do we really look at it is that how do these currencies really move? So that to some extent there is an interest rate differential play going on, which means if you just look at US policy, for example, the Europe decided that they didn't really want to start raising rates, and the US is raising rates way ahead of Europe. That's really making the dollar stronger than what the euro is doing. If we go back to 2015, I think somewhere around there, when the eurozone said we'll do whatever it takes. That was another reason when the dollar was rising, mainly because the euro was falling. They said that we'll do whatever it is to weaken the euro, to do a lot of QE so that our economy can get supported. That's also a reason why we see that European stock markets don't seem to really be falling as steeply as US stock markets, because they're continuously supporting it with with their monetary stance that they don't want to tighten too hard. Japan is completely not doing it because their inflation rate at barely 2%. They feel that this is hardly any inflation. We are okay. We don't need to raise rates. Europe feels okay. Our inflation is a little higher, so we'll raise it a little bit. And US is really fighting with it. So this differential is causing the dollar to rise, and it does then play on it. What it ends up doing is hurting the rest of the world. See, you've seen every time the dollar's risen, we've seen crisis in particular markets. This time it's ended up being Sri Lanka. Last time it was Turkey. Prior to that, it was even Brazil had trouble in the 2010s in between. So did Russia. So all of these places have been affected to some extent, and this is now beginning to affect, I think, almost every market, because you're seeing the pound weaken, you're seeing the rupee weaken, almost every currency is weakening. Now you can say that, well, if every currency is weakening, then actually on a relative basis, we are all constant. We are really not weakening against each other. We are only weakening against the dollar, but against each other, we are really doing nothing because we are all falling together. So that's another way of looking at it. And so maybe we are better off trading with everyone else rather than the US itself. And and that's the pushback. I think at the end of this road, the pushback is that everybody will decide that then we don't want to transact in dollars anymore. I don't know when that will happen, but as of now, looking at the dollar, it just tells us that this is the scenario where you're putting pressure on everybody else to fall in line with the mandate in the US.
One last question. 17 months ago, the Nifty was at 12,000 or thereabouts. Do you see it coming again or no chance?
You mean going back to 12,000?
Yeah.
So I think what I mentioned in my talk earlier, Sharadji, before you joined, is that while I'm calling this a bear market rally, what I'm also saying is that the worst leg, if at all, is probably ahead of us and not behind us, which means that the next sell-off is going to surprise excessively on the downside. So I'm not putting a particular level to where that will be. I've already mentioned the monthly support is, of course, around 14,000 something. But I'm not ruling out an overshoot, because that is what markets do. They don't really stop at any particular level. They will always overshoot, specifically when it's a downside move. And so if you tell me 12,000, I'll say 61% retracement of the entire post-pandemic rally comes to around 11,800, which is very close to 12,000. So that is a fair level to expect if there is a panic in the markets going ahead.
So I can sleep peacefully tonight, huh? Thank you.
Rohit, I just want to add one point on the currency, to Saraji's point. See, the way, very simple point is that if Japan chooses to continue to weaken their currency, then the second biggest exporter with competing with Japan is Korea. And Korea would also allow the currency to depreciate, because both Japan and Korea compete on autos and electronics. And we know that the electronic cycle is actually falling quite rapidly. Pretty much almost every market, you see handhold sales actually declining. And so if you think about it, if Japan continues to depreciate the currency, so will Korea, and then countries like India can't be left behind.
Right. Yeah. Yeah, that's an indirect currency war.
Okay. Dave, you can unmute and you can ask your question.
Hi, Rohitji. Good evening. This is Himanshu.
Hi.
Can you hear me?
Yes.
रोहित जी, मेरा सवाल ये है कि वीकली के चार्ट में अभी हम देखें, मेरा टेक्निकल क्वेश्चन है एक्चुअली बेसिकली, और यहाँ पर ये जो करेक्शन आया था फ्रॉम अराउंड 18,173 से लेके जो 4 अप्रैल का हाई है, ठीक है, 4 अप्रैल का जो वीक है, और वहाँ से जो फॉल आया अप टू 15,211, तो ये पूरा जो एक्सटेंशन है दैट इज 100%. सो ये एबीसी करेक्शन खत्म हो गया है या नहीं? डोंट यू थिंक मतलब कि ये एबीसी करेक्शन इज ओवर नाउ? और दूसरा ये है कि आप जो रैली बोल रहे हो कि ये बेयर मार्केट रैली है, तो डू यू क्लासिफाई इट एज बेस्ड ऑन टेक्निकल्स और डू यू ऐड सम फंडामेंटल्स आल्सो? और
So I answered that question in my opening talk, but I'll just quickly answer it that yes, I look at factors beyond technicals, because I don't want to say just because it has retraced 80% or just because it has gone above 17,500 that we should now change the classification that it is a bear market rally or not. And therefore you have to look at various other macro factors, जैसे कि डॉलर की बात हम लोग कर रहे थे, डॉलर है, इंटरेस्ट रेट्स हैं, लिक्विडिटी के जो फैक्टर्स हैं, यूएस का पॉलिसी क्या चल रहा है, यूएस का मार्केट तेजी में कि मंदी में, ये पूरे फैक्टर्स को कंसिडर करके हम लोग फिर सोचते हैं कि हाँ ये चीज हो रही है या नहीं हो रही है, और अगर लिक्विडिटी फैक्टर्स इतने ही स्ट्रांग है तो वो फिर टेक्निकल्स में किस तरह दिखेंगे। तो हम अगर चलो ये बात मैं जो बोल रहा हूँ ये गलत भी है, तो ऑल्टरनेट क्या है? ऑल्टरनेट ये है कि यस दिस इज अ बुल मार्केट, ये 20,000 तक जा रहा है, ठीक है 400 पॉइंट आगे चढ़े जाएंगे। अगर ये आप दिल से नहीं कर सकते तो वो एक अलग प्रॉब्लम है। इट इज एन इमोशनल एंड साइकोलॉजिकल प्रॉब्लम, इट हैज नथिंग टू डू विथ गेटिंग एन एनालिसिस ऑफ द मार्केट। क्योंकि अगर बाजार बहुत दूर तक भागने वाला है तो आपको ये तय करना है कि ये बात सच में सही है कि नहीं, और इसको तय करने के लिए आप 200-400 पॉइंट ऊपर नीचे छोड़ दीजिए। तो वी आर एट अ पॉइंट जहाँ पे आपको ये सवाल पूछना भी चाहिए और इसका जवाब आपको मिलना भी चाहिए। मुझे तो जवाब मिल गया है कि मुझे लग रहा है नहीं है, और अगर है भी तो करेक्शन या कंसोलिडेशन के बाद देख लेंगे, क्योंकि कोई भी बाजार जो है वन वे 5,000 पॉइंट तो नहीं भागेगा।
यस
कहीं ना कहीं रुकेगा, कहीं ना कहीं कंसोलिडेशन होगा, और उस कंसोलिडेशन में आप समझ पाओगे कि हाँ भाई ये एक करेक्शन ही है और ये नीचे की तरफ बेयर मार्केट नहीं शुरू है। बट अभी तक ऐसा कोई भी सिग्नल नहीं है कि हम ऐसा सोचें।
नहीं, एट व्हाट पॉइंट हमें पता चलेगा कि नाउ मतलब दिस इज नॉट अ बेयर मार्केट रैली एक्चुअली?
मैं टेढ़ा सवाल दूं?
पूछिए सर।
जब मुझे पता चल जाएगा आपको भी पता ही चल जाएगा,
अच्छा,
बिकॉज आई एम कम्युनिकेटिंग एवरी डे। इफ यू आर रीडिंग माई वर्क, अगर आप मेरे काम को हर दिन पढ़ रहे हो, मैं जब बदल लूंगा मैं बदल दूंगा, आपको पता चल जाएगा। अगर आप ये पूछ रहे हो कि बस एक कुछ ऐसा आंसर दे दो जिससे कि पता चल जाए, तो मैंने बहुत सारे आंसर्स दिए, करेंसी से लेके इंटरेस्ट रेट से लेके यूएस पॉलिसी तक लेकर, उन सबको अगर आप समझ के कोरिलेट कर सकते हो तो आप खुद वो जवाब जान पाओगे। मेरा करंट उसका जो समझना है कि इट इज स्टिल नॉट 100% not a bear market rally, which means it is a bear market rally. So I have to prove otherwise. मतलब आपको मुझे एक है, आप मुझे सवाल कर सकते हो कि आपको क्यों ये लग रहा है, मैं उल्टा सवाल कर सकता हूँ आपको तेजी क्यों लग रही है। तो यू कैन गिव मी फाइव रीजन।
आई एम नॉट, मैं ऐसा नहीं बोल रहा हूँ।
मैं आई एम जस्ट हैविंग एन एक्टिव डिस्कशन दैट सी यू हैव टू लुक एट बोथ साइड्स ऑफ द कॉइन। ओके, तो अगर मुझे तेजी का भी व्यू बनाना है तो उस चीज के को भी वे कर लो कि चलो क्या फैक्टर हो सकता है। 18,000 तक आगे जाने के 5 फैक्टर्स चाहिए मुझे, तो वो फैक्टर्स क्या होंगे?
ओके, और ये वीकली में अभी आपको लग नहीं रहा है कि दिस करेक्शन इज स्टिल ओवर, राइट?
मतलब नीचे की तरफ?
नहीं, ये जो अभी जो वीकली जैसे मैंने बताया कि जो 4 अप्रैल से फॉल आया था, राइट, फ्रॉम 18,173 से,
हाँ,
तो ये जो एक्सटेंशन है ना, तो पहले फॉल का 100% एक्सटेंशन है। पहले जो बॉटम बनी थी दैट वाज अराउंड 15,676, और फिर वहां से मार्केट गया था 18,173। तो उसका ये 100% एक्सटेंशन था, दैट वाज कंप्लीटेड अराउंड 15,200। सो मेरा क्वेश्चन यही है कि 100% हो गया है तो डजंट इट मीन कि ये वेव सी कंप्लीट हो गया हो?
नहीं, वेव सी ऊपर की मतलब आई एम नॉट एबल टू अंडरस्टैंड व्हेन यू से वेव सी, यू आर सेइंग
वेव सी ऑन द डाउन साइड सर। आई डू फॉलो एलियट वेव, तो मैं
आपको बताता हूँ। एक होती है छोटी मंदी, एक होती है बड़ी मंदी। छोटी मंदी में एबीसी खत्म हो गया बोल सकते हैं, बड़ी मंदी में एबीसी के बाद एक्स भी आता है।
यस।
So you have to so when we say it is a bear market rally, we call it an X wave. If it is a larger bear market which is going to consume a longer period of time than usual.
Okay.
So just because it is 100% retraced, we are calling it an X.
Okay. Thank you.
There is a lot of people saying that they can't hear it. Do you really want to restart it? I mean, there's like 800 people, but I'm just saying there's no people. But 90 people have recommended that they can't hear it. That's a lot of people.
Oh my God. How do I restart? I have to create a new spaces there.
Now it's okay, I suppose, Fact Finder.
Yes, actually, in between your voice was cutting a bit, but now it is clear, I think.
Yeah, so we can.
नहीं, मेरे यहाँ भी कंप्लीट ही आ रहा है वॉइस, कोई इश्यू नहीं आ रहा है यहाँ पे भी।
So we will continue.
All this Twitter का problem है ये. Not sure whether.
I think it can be a Twitter issue, not our issue also.
but
नहीं, आपका इंस्ट्रूमेंट वो ये एप्पल का होगा इसके लिए. Anyway, चलिए, बराबर है.
do we restart this, Rohit?
No, 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 no.
No, I mean, a lot of people who are here are able to hear.
Okay.
Yeah.
That problem, Chavan, I know it was in the beginning because I was not speaking. Some people thought कि आवाज नहीं है. अभी if it's still happening,
No, 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 no.
and some people can hear it, then it
Continue,
cannot be
please
everyone's
continue.
problem.
No, no, please continue, Rohit.
Yeah, I think we'll continue. So Chavan, you can move the question to someone else.
Okay. Kyati, please, you can speak.
Hi, Rohit sir. I follow your work very closely. I have two questions. When you say the bear market has arrived, what is the time frame, sir? What is the time frame that you're looking at? And read a couple of reports where even Johnson Porter is saying that this what we are dealing with in the US. I totally agree with you, and I'm with you on the entire. Analysis and what you said in your opening comments about the US markets, NASDAQ, everything. My only question is that even if you see what Geeta Gopinath has tweeted recently about the forecasted rate of growth of GDP and overall growth rates for all the countries, we are doing pretty well. And on the Indian economy, I think except for the fact that everybody else goes down, even we'll go down. There is no choice there. But is there a possibility, if you can say so, that if you are a relative outperformer, then your markets will also relatively outperform? You will not go down like the rest of the world.
So when there are minor corrections, that relative outperformance theory has some relevance. But when there are major bear markets, for example, if the S&P falls as much as it has done in the last year, and in fact, as I'm saying, wave C down could be larger than wave A, which means the next leg down would be much steeper than what we have seen in the US indices. In that scenario, thinking that the Indian market will not fall significantly or outperform on a relative basis is a slightly difficult concept. In terms of the time frame that you spelled out, this is going to be, I mentioned, based on history. Most long bear markets last for 15 to 21 months in India, which means we are at least going out to say March of 2023. That's sort of a timeline that I'll keep. So yeah, that answers both of your questions. And just on the sound thing, other thing is that this is getting recorded, and therefore people who are not able to hear can listen to it later on.
So one more question. So you track commodities very closely, and you've been, your analysis on commodities has been bang on. What is your future outlook for commodities? You still think it's going to be a deflationary trend, and we are going to see lower commodity prices or higher? I think your analysis points to a higher commodity prices.
No, so I think I'm bullish on the commodity cycle on a long-term basis. But what is happening right now is that we are getting the first hiccup, usually the second wave, as we call it in Elliott wave terms, and the second wave ends up being the deepest, sometimes retracement of the first wave up. So a significant retracement of the entire up move in the commodity prices that we saw between 2021 and 22 are actually taking place right now. And from a short to medium term perspective, is that over? The answer is no. The things like the Nifty Metal Index, for example, specific to our market, has retraced exactly 66% at the recent top that it made 2 days ago, and has started to fall from there. So unless we really go above that, I think the next wave down for metal stocks or metal prices should be ahead of us. And the rising dollar also points to that, because whenever it's rising, which is what our opinion on the dollar index is, then you get further weakness in commodity prices. We aren't seeing much of it in copper, but we have seen some weakness in other spaces. And I think I think there is a complete leg down pending for commodity prices before the next longer term up wave can start.
Okay, so if I have a view for or a time horizon about 2024, 25, then you think it is going to be the third, the longest third up, whatever it is in
Yeah,
million.
by that time, probably the next wave, the long wave up, would have started. Well, what you'll have to deal with in between is the drawdown.
Yeah. Okay, sir. Thank you so much.
Can I just add something on the GDP numbers?
Sure.
Kathy, one thing that people see, I don't think we should just look at GDP numbers per se, because it's a lot. It's very much survey based. But if you look at real numbers, right? I mean, and I'll give you a very good example, right? I think Kantar Global just came out with a survey on. I'm not survey, rather they track FMCG across the country in terms of volume. And what they mentioned is that there was a slight pickup in rural India, but if you strip out things like beverages, which is cool drinks, stuff like that, then and we had a pretty much hot summer. Then actually again FMCG pretty much across every segment actually saw a decline in rural India. Urban India actually had a 4% decline. That's Kantar. The other competing guy is Nielsen. Nielsen came out with the data for Unilever, and Unilever presented that in their quarterly presentation. According to them, for the last 3 financial years, there has been negative volume growth in India's FMCG across the segments in which Unilever operates. And Unilever is the second largest FMCG company in the country and operates on several segments in the country. And if they are seeing a negative growth, and this is not just Unilever's volume, they're saying across segments in which Unilever operates, the volume is declined in both rural and urban India for the last 3 calendar years, financial years. So, that doesn't connect with our GDP number. And I'll give you another way to look at a GDP number. Just do one thing. When you and I make a transaction, we pay GST, right? We pay CGST and SGST. We don't pay IGST. Just do one thing. Look at the last 2 years of CGST and SGST numbers. Don't look at GST in total. Just look at SGST and CGST, which is the central and the state, and divide that by the 2-year CAGR of the WPI, and you will get a negative number for several months. So that doesn't again tie up with the so-called GDP number. And then if you look at things like, I had written a thread on LPG consumption. In the last 3-4 months, LPG consumption in India has been negative. So, I'm just saying, if you look at various data points, I know it's easy to look at auto sales, but remember, auto sales four-wheeler sales haven't grown for 5 years, right? There is a pent-up demand. You've not had, commercial vehicle, heavy commercial vehicle sales have not grown for the last 5-6 years. So you will have some pent-up demand, but that is not the full economy. You got to look at various aspects, and I think FMCG is the broadest aspect of the economy. The second point I want to people don't appreciate is post-COVID, there's been a dramatic change in the way money is managed globally. It's moved so dramatically in favor of ETF versus non-ETF. The issue is that when you have these massive corrections, you have a very swift rally, and a lot of these swift rallies are driven by ETF flows, either in or out. And that's what
Well, hopefully this one will run. So I've called it part 2, so that it shows up as a second part of the recording. I will need the participants. This is a Twitter issue.
Rohit,
Yeah.
yeah. Okay, where do we start now?
Yeah, we were in Q&A. The part 1 is already recorded and auto published. So we beginning. But to continue the Q&A, okay.
Okay, fine.
Yeah. So Jay, you can kick off the discussion, and then we'll call in questions from everyone.
Yes, sure. Sir, am I audible?
Yes, you
Yes.
are audible.
Okay. So yeah, I mean, sorry, I couldn't join earlier as I was tied up with some work and I missed the earlier part. But overall, the setup for Nifty, Nasdaq, and all, I think Sir must have narrated, and it looks weak. And moreover, I think not many people.
I guess is not. I mean, his network is bad. So the fact finder has joined. You can continue your conversation.
Uh, Hello.
Hello.
Yeah.
Hello, may I speak?
Yes, sure. Please ask you. Go on.
Sir, my only observation is that during last 9 months, FII have sold nearly 33 billion, and market has fallen around 18 to 20%. And after their only $3 billion buy orders, the market has recovered literally 80% of that. So don't you feel that market can go anywhere from here on the upside if some more liquidity comes in?
So
And my
it's a fair
second,
argument. It's a fair argument. The one that I'm trying to make is to judge exactly that, whether more liquidity will come in or not. And I'm making that judgment based on the US tightening cycle, the global liquidity environment, and the currency environment, which is the dollar, where the rupee is weakening. And we are presuming that money will keep flowing in despite a weaker rupee. And I would think there is a risk to that happening, and which is why we are taking the stance that that may not be the case. Now, we also don't want to be looking at backward data and extrapolating that into the future. Now, just because FI is bought for a few weeks in like more than a year, should we extrapolate that they will keep buying for the rest of the year? I think predicting their flows has been one of the most difficult things. And other thing is that their flows really don't drive the market. That is part of what I said in the Money Control interview, that FII flows or DII flows, in fact, most of the time just end up netting each other. If they are buying 500, they are selling 500. Somebody is selling 500, the other guy is buying 500. So does their flows really determine the direction of the market? And my answer is no. What determines the market direction is the actually underlying trend of sentiment, behavior, and liquidity itself. So, is FII cash market flows a reflection of liquidity? No, but FII futures and options positioning is a reflection of sentiment, and that is how then we actually end up analyzing that factor.
no, one thing I want to add that see, market has a strong buying interest is observed, that huge selling is being absorbed and minor buying is being literally market has shooted from that 15,200 level. So there is that the selling is being absorbed easily, but
No,
buying
but
they are not getting opportunity to buy.
you are presuming that FII is the only player in the market. That is not the case.
But the major player is FII, na?
No, that is a wrong presumption. That is
So
already
do you think retailers and DII can take this market downwards?
Well, if given the amount of FII selling, FIIs should have crashed the market more than they did. The argument last year was that they couldn't crash it because DIIs and retail investors are buying. Now you're telling me that they are buying so much so others cannot sell. So let's get that argument out of the way. Let's try and look at the market from a different perspective.
On technical also, I am seeing that this is a typical pole and black flag pattern which has exploded on the upside now.
Okay. But what will keep it from changing? That is what I am asking. How do you extrapolate FII will keep buying? See, I'm saying that you are presuming they will keep buying. And that is why it will go up. Little bit of buying drove it up. So will they keep buying?
My bet is only that that now retailers are
So
adding
then,
day by day.
so when I take that bet, I am trying to make that bet not on the basis of my feeling that because they are buying, they will keep buying, but that liquidity is measured by looking at which indicators. Should I look at the currency market? Should I look at what should I look at? Should I look at the rate environment? Should I look at the reserve, the global reserve market?
I am typically looking at the sentiments of the market, that everyone is
But then,
bearish now,
but
and
no, no.
still market is going up.
Now I will counter that. Everybody was bearish at 15,200. I also turned bullish. All my posts are in public. At 15,200, we have already predicted that it will cross 17,000. At
But now also
17,000,
everyone is bearish.
no, that is what you think. The data doesn't show that. What data are you using to measure that everybody is bearish? For example, let's just take the FII futures data, which is why I said measure sentiment based on data. FII net positioning in the futures market, which is more relevant than looking at the cash market from a sentiment perspective, was short to the extent of more than 1 lakh contracts. I think 1 lakh 75,000 contracts or so was at the peak of the pandemic, and I think at this bottom it was around 1 lakh 45,000 contracts in June. In June of 15th, it was 1 lakh 45,000 contracts when we were at 15,200. They were short. At the end of July,
Okay.
at the end of the July, by the time we crossed 17,100, 200, they had covered their entire short position and started to go long. Now, throughout August, their long position is flat at 20,000, 10,000, 12,000 contracts. They are not going long more than that. Okay, so you're only measuring it by cash market. I'm trying to look at a different measure. I'm saying in the futures market, they're not buying anymore. Okay, so in terms of positioning, we are already gone from short to no short. Another way you can look at it, let's forget FII. You can look at the index discount or premium in the futures market. Just look at the Nifty futures premium or discount. Last, all the way you go back to June, it was running at a discount of 40 points. Right now, if you look at September futures relative to current month, it is running at a premium of 90 points on some days intraday. At the end, by the time we look at it till expiry, it may be 40, 50, 60 points, which is pretty high. So you're gone from a huge discount to a premium. That to me is a better sign of sentiment than the 5 people that you speak to and feel that everybody is bearish. How are you judging everybody is bearish? It's usually based on 5 people you speak to.
No, definitely not. But what do you think that
No, then
where
what
the
data?
pain
You
can
give me
be?
a data point. I'm giving you data points. You give me a data point saying everybody is bearish. It should show in your data, no? It should show in short positioning. If everybody is short, Nifty futures should go into discount, not premium.
That is what I'm saying. That
Okay.
where the
Or if you
pain
want to
can be,
measure it on mutual
where the
fund flows,
pain
you
can
measure
be.
it on mutual fund flows. SIP flows are positive, not negative. So who's
Definitely,
bearish on the market?
that is what I'm saying. That the SIP flows are continuously coming.
So how are you
DII,
saying that everybody is bearish then? See, I am just countering data with data.
what my argument is that DII are buying because SIP flows are coming. Retailers are opening new and new accounts, and they are also adding their position. FII is not able to keep this market down. So if at all FII has to sell and markets still don't go down, then what will happen if they start buying? So I guess more pain is from the upside and not on the downside. If market goes up, there will be more pain for everyone who have left out.
Yeah.
Hey, Tortoise, see, you got to look at things differently, right? Your primary assumption, and let's look at domestic flows. First of all, I completely agree with Rohit on whatever data points he said, that don't look at just cash flows. You have to look at a combination of cash and futures when it comes to foreign institutional investors. That's one very important thing. Secondly, in terms of what you're saying that domestic guys are buying, just for perspective, the same argument could have been made in February and March when the markets collapsed, right? In fact, foreign institutional investors at that point of time sold lesser amount of value in February, March than what they sold in May and June. May and June were the biggest outflows, and yet the markets really didn't correct because it depends upon the market moves depending upon not necessarily flow, but depends upon the the amount of action which the buyer or the seller wants to sell or buy, right? And in case of May and June, the domestic institutional investors, and especially led by LIC, decided to buy at very aggressive prices, regardless of price cost or cost of stock, right? Which is why the market didn't correct. Now the question you got to ask yourself is, will that continue? The second question you got to ask yourself is, if you look at cost of money in India, I don't know whether you've been talking to any bankers, but Bandhan Bank, for instance, recently came out with a fixed deposit scheme of 7%. When was the last time you saw a fixed deposit of 7%? So as the and if you look at what the RBI is doing, they are not really providing too much liquidity in the market. So as your deposit rates keep going up because RBI is not providing liquidity, there will be that switch asset allocation away from domestic equity to domestic debt. When that happens, you can actually see a fall off on potentially inflows into the market. Because at the end of the day, you can't have both interest rates in India going up as well as the stock market going up. So you got to, take a balanced view over it. And remember, foreign institutional investors are opportunistic. They don't care about whether they're losing an opportunity here or an opportunity there. They are saying, where will I make the most amount of money? If you were, and then give an example. In the month of March, if you had bought China, you would have made more money than buying India. Like the Chinese tech companies collapsed in March, right? But from the bottom, they went to the top. You would have made 45-50% in a very short span of time. So they look at opportunity. Where will I get my opportunity? Tomorrow, the US market goes down 25%. They're going to say, listen, the US is far cheaper. I don't take the risk of currency. I will sell my stuff in emerging markets and buy the US. At that point of time, I don't think India can just stand out and say, okay, our valuation that we are in a bull market and we keep going on. No, it's about liquidity at the end of the day. It's about opportunity at the end of the day. So look at it that way. Don't assume that, and bear in mind, if India is a country short in foreign capital. We require capital to grow. If we don't have foreign capital coming in, we are the losers. So it's very important that foreign capital keeps coming into India.
Okay. Thanks, Rohit sir. It was very nice interaction with you. I really follow your all the charts and learn a lot of things from you. Thank you, sir.
Okay. Unfortunately, Rohit is having a problem. I'm not sure. He's not able to speak. He just messaged me. Jay, can you take the questions?
Yeah, sure.
Okay. Next is Niveshak. You can just unmute and you can ask. Unfortunately, Rohit is still struggling to, get his network back. So Jay, who's an analyst at India Charts, he'll be taking up the questions.
Okay, thank you, Chavan, and hello, hi, Jay. Actually, my question is not more on the market movement and all those stuff. I just want to understand one thing. If you are going through the export data, I just want to understand whether this export data, which is being shown by the Indian government, or I have read in various articles that it has improved a lot. I mean, we have become a net export positive and all those stuff. But I can see also various rebuttal from various, stakeholders and the guys who knows market and all those the data well. So I just want to understand that if export is really going very good, and related to that, I have another question that if the improvement in export, it really shows, that structural story of India is getting more better, and the businesses, all the business surrounding it or related to it will improve. And the last question related to maybe export or not, that do you think that any data, whether it is related to currency or related to price of gas or anything, will surprise, where all the data right now we have with us, it will simply surprise the way the data is showing. So please, if this question stands valid as per the topic of this space. Thank you, that's all.
Okay.
Yeah, so what I think, I mean, what I have read, I think we are running into deficits now, and that too maybe because of crude. So maybe Fact Finder can, highlight this on bit. Uh, uh, but largely of what I have heard and I have read, I think we are actually running into deficits. So yes, I think the in value terms, I think exports have grown. Okay, but to that extent, I think the imports are actually running at a much faster pace, and because of which we are actually in a deficit, if I'm not wrong. So maybe Fact Finder, if you have anything to add to this.
Yeah, no, thanks a lot. Jay, I think you hit it on the head, hit the nail on the head. Nivesh, the thing is, because of inflation, right? We've all heard of inflation of commodities, right? And because of that, if you look at India's import and export, we, for instance, import crude oil, refined product. Like Reliance exports almost 50-60% of their product that they process. Gold, for instance, we import gold and we export it, right? So I would not look at export in in one bucket and say our exports are growing. There's been huge inflation. WPI, for instance, is up 16-17%, which means for the same product we are at 16 to 17% higher. Don't look at exports per se and say exports are doing well. You have to look at net. In fact, what Jay mentioned is that our current account deficit is actually at the highest level ever for a monthly basis. I think we touched about $31 billion on a monthly basis in the month of either June or July. It's the highest ever. And if you go into the detail of it, while exports grew, imports grew much faster. And there are two ways of looking at the import data. On one side, you can say that consumption is better because people are importing more electronics, people are importing more capital goods and stuff like that. But it's not true that our imports are doing really well. And if you look at our end markets, right? For example, Europe is one end market. It's not doing too well, right? So you will see an impact out there. And I'll give you a couple of other data points. For example, steel, right? Steel, if you recall, Government of India had put a restriction on steel, and India was a decent exporter in steel, and we were taking advantage of the situation in Europe. But then the government came in and put in restrictions. So that hit exports with a lag, which is why you saw an increase in our current account deficit over the last couple of months. Similarly, wheat, right? Initially, we were exporting wheat. Now we've stopped it, right? So hence our export number, reduced, but our imports continue to grow. So I hope I answer your question. But yeah,
Yes,
just
yes,
keep in mind.
yes. Yeah, I one thing, just because you answered, I forgot to ask if you can help me answer this question. Okay, I have gone through some data and I have seen that, especially engineering goods, how I am coming back to engineering goods is that it's a very big margin export business of the India. And the second part is that also create lot of job. I mean, not as part to IT or other industry, but still it creates a large, it creates a good middle class income generating people. That's what I read. Please correct me if I am wrong. There is a massive, I think, somewhere I was reading in an article in last decade or so, there was a very good improvement in that. So if that data is also correct or not, because when I see and I go through, and I also go through very, people who know very well, sometimes they refute it, so I got confused. So I also try to understand from few of my colleagues and friends who are in logistics sector, which I track also well, to correlate with this export data. They say yes, they are seeing a lot of traction in that part. Can you help me there? That what do you think about this engineering good, please? Thanks. And
Eddie, if
now
you
I
want to
will
speak, you
stop.
can go and speak.
Sorry, Niveshakji, the question was on consumer segments like middle class, growth, jobs, etc.
You can relate it to, but it was more on a export side of engineering goods. I just want to, I am just trying to see that if India can really throw a surprise, some data, which is hidden, some structural changes are if actually happening or not. I just want to understand that. And something is known by, because the market movement, though I'm not much interested, it seems that something is trying to stop it from falling, or maybe something we all don't know after seeing the whatever data right now with us? My question is on that side. So I'm trying to correlate with various sector. If it is really true or something we all are not aware, something can throw a surprise. So I was trying to correlate with export. Maybe if doesn't, it is a wrong way I'm going, I will try to find something else, or else market should fall below 10,000 or 12,000. That's where I was thinking. Please carry on. Sorry. Yeah.
Okay, so short answer, no, there is no hidden surprise. A really short answer. Let me explain. The economically, we have lost. So I'm a consumer marketer by profession and expertise. I'm an amateur trader actually. So don't take my trading advice, but I can stake my reputation on my opinion on the consumer pyramids and jobs and so on. The and यहाँ पे वो भाव भगवान से concept doesn't apply. You know, stock prices can do what they like. Over the last 7, maybe 10 years, taking a longer time frame, we've seen a steady loss of middle class jobs, especially in the like 35,000 per month plus wala segment. What we have seen very visibly over post pandemic, because it's now very apparent, is the lower middle class. There's like some segment who moved down into the poor. From the middle class, people have moved down into the lower middle. From the upper middle, some have moved into the middle class, and some from the upper middle class are moving into the rich. So you're seeing now essentially two Indian consumption sort of trends. It, like almost like say metals was on a violent rally, and many other sectors, you know, were like getting hammered when last year QE was happening, right? Similarly, top 5 crore India mega party. I mean, there's like serious cash flow improvement. There is serious wealth effect. They are highly invested in financial assets. They have real estate. They have global portfolio. They have dollar income, etc., etc. उनका बहुत party चल रहा है. The remaining pyramid is under severe stress. Fact Finder mentioned it earlier. I'll just recap that in the previous recording. That AC Nielsen shows FMCG volumes have been negative. It's a first in my career. It's a big deal that all India, all category put together, volumes are negative. North, East, West, South, urban, rural, individual categories, personal care, healthcare, foods. In summer we had some beverage pickup as Factor mentioned, but that's like a one-off. In other categories also we're seeing volume decline. So two-wheelers declined in July. Mobile handsets, which was like an amazing growth story, is down in Q2, April, May, June, by about 5% versus previous quarter. And they exited the quarter with 10 weeks of inventory. Friends tell me now that 10 weeks is about 14 weeks of inventory. So essentially, we've lost a job model, you know, like which will create this consumption cycle, and people need more homes and cars and bikes and toilet paper and shoes. That consumption cycle has got hammered. Stock picking, of course, please. There are many better experts, so there are niches which will probably benefit. Like Bata is doing well because you know people are down trading. So you'll find opportunities in this, but at a broad level, things are not pleasant. Of course, markets are markets. You know, bankrupt companies get $5 billion valuations. So market में तो कुछ भी हो सकता है. I'm not an expert on those things.
No, बिल्कुल उस एंगल से नहीं बात कर रहा था. And thanks Srini. If there is some source from where I can extract this kind of data, or कुछ है ऐसा नहीं?
Yeah, definitely. I'll DM you some of these articles and all. I don't post heavily, Niveji, about this because it's it comes across as very negative. But this is the truth. So in corporate circles, it's being spoken about very openly. Nitin Paranjpe, the Levers chairman, he said, "I've not seen consumption stress of this level," and he's been working since '87. And he's like a really big guy, and really look up to him. तो मतलब 50 साल में उन्होंने क्या नहीं देखा है, वो तो प्री लिबरलाइजेशन दिनों से घिस रहे हैं.
बट पता है कंफ्यूजन कहाँ होता है एग्जैक्टली. मैंने उनका भी सुना, एंड व्हेन आई हर्ड फ्रॉम द मैनेजमेंट ऑफ टाटा कंज्यूमर और आईटीसी, वो बहुत ज्यादा पॉजिटिव साउंड करते हैं कि
once let me sorry to interrupt you. What the positive guys are doing, and I support all the management because it's their job to. I've been a marketer. It's your job to market your company to shareholders as well. So what ITC, for example, has done, if you listen between the lines, they say this segment is doing well. we are opening new hotels and we are confident of our demand. And so, they are careful about unka kahan pe acha chal raha hai. But if you go through what they're saying, they are not contradicting what the levers guy said. Sunil Duggal, famous CEO of Dabur, took it from 700 crores to almost 10,000 crores turnover over 20 years. He said, this is a structural demand issue, which is a code for something is broken. When they say temporary or interim demand issues, they're referring to interest rates, zyada hai, liquidity kam hai, ye wo, kaccha pani, those kind of things.
Correct.
So a lot of the positive commentary is actually honest from the blue chip guys. They're not, but it's a job to showcase their
Okay.
company. तो वो
Because
तो अपना काम कर रहे हैं.
आई अंडरस्टैंड मैं वो भी आई नॉर्मली मैं सारे कमेंट्स तो बहुत सीरियस नहीं लेता हूँ, लेकिन जैसे फॉर एग्जांपल कंज्यूमर के डिसूजा साहब ने कहा कि वी हैव अ वेरी रैपिड ग्रोथ स्टोरी इन टर्म्स ऑफ दैट टाटा स्टारबक्स, और जो टाटा स्टारबक्स के कंज्यूमर हैं दे आर वेरी आई थिंक मे बी अपर मिडिल क्लास या मिडिल क्लास एटलीस्ट है, एंड ही इज वेरी पॉजिटिव,
Super class.
बट मे बी या सॉरी.
No, I said people who go to Starbucks are very, very rich.
हाँ, उनका पार्टी चल रहा है. He's right. I know Sunil. He's an ex-Pepsi guy. Then he ran Whirlpool very well. Very highly reputed. Everyone looks up to him. He's saying the truth. Top 5 crore Indians का पार्टी चल रहा है. तो उनका Starbucks में पार्टी चल रहा है as a company operator. But ask him Whirlpool का sale का क्या हो रहा है sir? He won't answer.
Correct. Thank you.
Anyways, back to the markets.
Yeah.
Rohit?
Can you hear me now, Chavan?
Yes, perfect, Rohit. You're back.
Okay.
Yeah.
Sorry, I have a
Thank
few things on the market, Chavan, if it's okay.
Yeah, sure.
please.
So basically, these are Rohit ji Bura mat manna. So Rohit forgets a lot of basics, which he talks about in his longer updates and all. A lot of traders are like new guys. They were dealing with psychology and so on. So there are basic things which he's mentioned and they're in public, which is if I'm a perma bear, but if there's a rally, I thought it's a bear market rally. Now till from 15.5 to 16.5, it was easy. I had higher conviction than the bulls. So bear market rallies are supposed to be more vicious and stronger than bull market rallies. After that, I was like conflicted. So Rohit's point was, so up position chota kar dena and play shorter. So like do long, exit, then again do long, exit, again do long, exit. So if you're a perma bull and if it's going down, then maybe you take the other side of this logic. The second is we shouldn't make a epic debate out of something. So I, for example, have decided 17,800 to 18,200 मैं trade नहीं करूँगा. तो मेरे लिए सब शांति हो गया, and now I'm short because I think it's a bear market. So there are these things we can do with our own mindset, which and Rohit has a lot more of these, but he's not been mentioning this. I thought I'd bring it up. They're all Rohit's points. Thank you.
No, definitely. And we go into a great detail on how to manage a trade. In fact, that was, I think, right at the beginning of today's spaces. I've spoken on that topic because of what people come and question on Twitter in terms of what is your view and should it change here, and asking me to do a spaces with someone else who has an opposite view, for example. And I said, how does it matter how will it help you? I mean, if you are an investor, you want to listen to a debate between somebody who's bullish at 18,000 thinking it's going to 20, or bearish at 18,000 thinking it's going to 14. I said, how does it help you as an investor to listen to that debate? What are you going to do at the end of that? And the answer is he will not know what to do, because neither the two who are having that fight are going to come to a conclusion. None are going to agree to each other. It is very rare that one will bow and say, yes, you were right and I was wrong. And even and at the end of then, what are you going to really take away in terms of your strategy and decisions that you're going to take? So finally, whatever view you have, bullish or bearish, at this point of time, it comes down to execution. How are you going to execute that view? Okay, so if I'm bearish, how am I going to execute? If I'm bullish, what am I going to do? Am I going to buy when the indicators are saying sell? If I'm bullish, that means I should buy the next dip and when it's oversold. And if I'm bearish, I'll sell at the high when I get a signal that the trend is reversing. Both are completely different approaches to how we really trade and invest in the market. And so if people don't appreciate that execution is something to be learnt apart from having a view, and then the two have to be put together into an entire system of process of what you do on a day-to-day basis, then you never get the end results that you're really looking for. And so no debate has any meaning unless people figure out what to do in terms of execution. So when we are giving a view, they're not really looking at what we are trying to say, but they want something else. Or maybe they have their own biases, and so they're really hoping that they can clear their head on that. But you'll never be able to clear it by listening to two different opinions, because that won't change your bias. And so the real learning is, how do you really change your bias by actually having a factor model, and being able to checkpoint on, okay, this is right, this is wrong, this is right, this is wrong, which is very similar to the earlier discussion we were having on FII flows, that, this is all bullish. If they keep buying, then what the heck? And what if they keep, and what if they don't? The question is, what are you going to do about it? What is your strategy? How are you going to execute either of those views is really the final cake, in terms of taking it away.
Okay. Next up is Bruce. You can unmute. You can.
Hi. So the one thing the fact finder told, foreign investment quitting your country is very important. When big investment goes, especially from manufacturing sector, it means a lot. So I'll add two small stories, because I have long 2 decades experience of manufacturing sector. Holcim quitting the cement sector was a news, right? So Holcim is selling its Indian cement business to Adani, and the deal is going on. Now, what happened? So if you observe our manufacturing, especially the way the government controls, as a state, we are terrible at implementing contracts and committing the private investment. So there's just so much policy paralysis, so much dwindling happening. I don't know, especially the sectors like, say, coal, cement, because they are highly regulated. So regulation and how the state acts is very important. And I have observed Holcim working in the cement sector for almost, say, 10 years. So cement is the one where, raw material is very important. If your raw material resources, your limestone, then you have a future. Otherwise, because they are essentially, cement is made by limestone. If you have limestone reserve, limestone mines, which are natural resource with you, then you have a future. And exploration of limestone resources require innovation, require private investment in innovation and research, exploration, which is not happening in India. Traditionally, how the Indian cement companies are operating, they have old reserves. So they all, most of the big players like ACC, Ambuja, they have mines which are around 20, 30-year-old limestone mines, which reserve is fastly depleting. Now, a global player like Holcim, they would want new exploration, new limestone reserve to come. That is not happening. The way mining policy is operating in last, say, 10 years, auctions are not going good. Auctions are basically happening, but that whole idea has collapsed. The player who acquire mines through auction, they end up paying so much high premium that's not going to work out. So most of the cement players are having the limestone reserve, which are not going to last, say, 15 or 20 years. So a global player like Holcim had to actually want to think of selling their Indian business and quit. And I have seen this literally happening. It's not a good sign for a manufacturing sector, right? Coal, if you look at another example, coal. Now, we all know that we are 5th largest country in terms of coal reserve, right? And the situation is so pathetic that we are not able to meet the peak demand. So what happens in April, May, June, there is a peak demand. At the time of peak demand, there is a huge chaos. We don't have enough coal to supply our thermal plants. So we have to eventually then think of importing. Then there is a circular that you have to import 10%, and then how to absorb that cost. And then there is a constraint of logistic, how to make those rakes to reach the power plant. So this chaos happens every year. And because the demand is going up, and the country which is having such huge coal reserve is not able to mine its own coal. Why? Because there is a lots of policy paralysis. We have seen how our judiciary cancelled the coal blocks, how a narrative was created in media about fake coal scam which was not there. 2 3 days back I was reading a news article that a coal block was cancelled in 2008, and now in 2022 the Supreme Court had decided finally that there was no scam and the government has to pay 1 lakh to that private owner. Now imagine the situation of a private company like DLA Industries struggling from 2008 to 2022, losing their own business, losing their coal mine, losing their everything, and getting 1 lakh, as a fine and nothing else. Everything is destroyed for them, right? In such situation, no private investment would like to invest in your country, in your natural resources. So the idea of coal block auction has been miserably failed, and nobody is addressing that elephant in the room. That how to, because the different kind of logics are being given. Okay, we are allocating, we are doing this and that, but that thing is not being addressed. So unless, I mean, shortly, I would like to say, unless we address these policy issues in the manufacturing sector, because no, we are very good in service is growing well, and we've been traditionally doing good, but in terms of manufacturing, our country is not going good unless we address those basic issues in regulation, basic issues in policy paralysis. Manufacturing is not going to go ahead. And if manufacturing not going, then I don't think it's good for economy and for overall for everyone. So that's my limited take based on my experience, my regulatory experience of 2 decades in manufacturing sector. Thank
Okay.
you.
Thank you, Bruce. Last, no, we'll just wind it up in 5 minutes. So, okay. Next up is Mr. Ashwin. You can just unmute, ask your question to Rohit, please.
Hi, Rohit sir. Sir, I just want you to share your views on sugar sector for next 3 years. Yes, sir.
Rohit, are you there? Can you
Yeah,
unmute?
yeah. Sorry.
Yeah.
Hello.
Yes,
You can hear
Rohit.
me?
Yes.
So, see, as far as the sugar sector is concerned, I think it tends to move very much with the commodity cycle. And as I said earlier, I think there is room for the commodity cycle still to correct further in the next 6 to 12 months. But after that, I think you should see the upward trend for the sector resume. And 3 years down the line, of course, it will be in a better place. What you'll have to manage is what happens in between.
Okay. Sunil? Sunil, if you can unmute and you can ask your question if you are.
Anyone else looking at asking something or having a discussion can simply put in a speaker request so we come to know, because I don't see any requests right now. Else we can actually start winding up. We already done 2 hours, I think, into this.
Yeah. Okay. We can wind up, Rohit. Yeah. So, any ending statements, Rohit, with the markets?
I think I've made in detail, but cutting it short, we think that the market has peaked at the recent high of 17,960 or 70, whatever it made. Let's say 18,000 to put it right. It's sort of a triple top or so along a falling trend line of all the highs that we've made since October of last year. We haven't seen a breakout beyond that. Even if we did, it could end up being a false breakout because underlying what we are really seeing is a weakness in breadth, volume participation. While volumes were a little high in this last leg, when we compare it to the volumes that we saw during the bull run of 2020, 21, then the volumes are far, far lower than where they were back then. So in that sense, you don't really see the kind of breadth and volumes that you'd want to get in terms of a meaningful breakout. So unless we see a change in liquidity factors, I think that's the main driver right now, not just the fundamentals of maybe particular companies. And so irrespective, what happens in that scenario is valuations get derated. And the other thing which derates valuations is interest rates themselves. So when interest rates move up, the possibility of you getting the same stock at a lower valuation increases. When interest rates are falling, the reverse happens. So when we are in a low rate environment, we are not seeing the P ratio on average for the index really fall below 15 to 18. But as the rates are elevated, the risk becomes that will we go back to the baseline level, which in previous bear markets had been closer to 10x in terms of the index P ratio. Will we really go back there again or not? Needs to be seen. But having said that, all the factors are right now pointing downwards, and that is why I'll be prepared for the worst case scenario, meaning that I think the worst is still ahead of us in terms of this bear market and not behind us.
Okay, the last from Spark.
Yes. Hi. Thank you for giving me a chance to speak. Rohit, my question is for you. Earlier, you briefly spoke about the importance of premium or discount in Nifty futures. If you can kindly speak a bit more on that, because what I saw was during the entire rally, late June and early July, even during expiry, the premium would quickly go to discount. That would provide some comfort to the market, because then I assume that everybody was short. And in fact, for the last entire month or so, the premium has not been that much. But yes, like you rightly said, this is the first time, I think, in 1.5 months is when I'm seeing a significant premium in Bank Nifty. I think it was 200 or 250 points for September, and in Nifty. But I've struggled to understand the exact meaning of this, because this number changes very quickly. If you can please just talk about it.
Yeah, so the intraday or day-to-day changes in the number. So there are two things. So the way I measure it is I just try to look at the closing number, okay, and then I take an average of that. So that sort of plots it as an indicator. If I look at the intraday swings, then it can give me a mixed feeling. The intraday swings are driven more by arbitrageurs doing reverse arbitrage and then re-arbitrage and so on. But on average, when we look at the premium level, what it tells us is whether there are more longs in the system or more shorts, because that's what the buying and selling results in. So, for example, right now, if we are in the current month, and people are rolling over more longs than shorts into the next series, which is why you're seeing September premiums shoot up, which means a lot of people would be buying September and selling the current month. Fewer people would be doing the reverse, which is why you end up seeing that premium. And similarly, when the markets are down a lot, you end up seeing a discount, because similar buyers are not present, or more people are rolling forward shorts than longs, and that causes the index premiums to go down significantly. So it sort of helps as an indicator, and when the indicator is very down, we think it's more bullish, and when it's way high, then we think it's more bearish. That's simply it.
Okay, so basically, let's say the markets go down to 16,800, 17,000 tomorrow, and the premiums disappear and go back to a slight discount. Would that mean that maybe it's a temporary bottom and it's not a good time to short? Because I've never seen markets fall consistently with huge discounts. But the issue is, I don't remember what happened in 2015. Because I think then the same thing happened for a couple of months. But this indicator you're saying is just this. This is not something that can be used to identify market bottoms or tops, or even short-term bottoms or tops.
No, it does work in the medium term, not very short term, but medium term, like a couple of weeks or months, not weeks also, several months. So over periods of months, you'll see it go from discount to premium, and at that point of time, we do try to identify. But I never will use a single factor model. This is one of them. I'll use it along with maybe a dozen sentiment indicators to see that they're all indicating the same thing, because sometimes you get reverse divergences also. You can get a market top on a a bottom also on a premium, especially when the markets are sliding slowly. So if we go back to say the bottom of 2009, the last part of the bear market, the premium inverted from a discount to a premium. So sort of people stop shorting there, and so you get a reverse divergence. So we have to look at it, but main point is we use this to see whether it is at an extreme high or low, and then whether that coincides with our technical readings in the market, and just helps us gauge that state of the market.
Great. Thank you so much, Rohit.
Okay. Can we just take up a couple of more questions, Rohit, or should we wind up?
Yeah. If there is, we can, because
Okay,
I got cut this in between, so we'll do that.
Yeah, Sandeep, you can just unmute and you can, if you're there. Sandeep.
Hello. Should I ask?
Yeah.
So, what's your view on gold and silver going forward? If the bear market,
So there is downside risk to gold and silver. I think in terms of retracement, the risk I'm viewing is that if the dollar does continue to move higher the way we are thinking, maybe for several months, then say if we take a 61%, so my worst case scenario for gold would be 61% of the entire rally it has seen since 2015, and that could be closer to $1,500. So that is my worst case scenario. We'll see whether it actually gets there. That requires us to map it on a day-to-day basis, but basically looking at more downside than upside in the short term.
We have Piyush. Piyush, you can just
टाइटल रखा है आरबी इन बियर मार्केट। तो मेरा एक सिंपल सा क्वेश्चन है कि आप बियर मार्केट मान के चल रहे हैं अभी या बुल मार्केट?
नहीं, मैं तो बेयर मार्केट ही मान के चल रहा हूँ।
कोई कैलकुलेशन किस हिसाब से?
You will make me repeat my entire half an hour opening statement of this spaces if I try to answer that question.
सर कंगारू मार्केट है ना बियर है ना बुल है? जून
क्या मार्केट है?
कंगारू मार्केट है। बियर मार्केट तो तब होगा ना सर 20% से ज्यादा करेक्शन होगा। जो जुलाई 21 टू अक्टूबर 21 19% अप, तो अक्टूबर टू दिसंबर 12% माइनस, दिसंबर टू जनवरी 12%।
मैं आपको थोड़ा सख्त जवाब देता हूँ इस चीज का।
हाँ।
अगर मैंने अपनी जिंदगी में ये काबिलियत नहीं बनाई,
हाँ।
जिससे मैं आपको होने के पहले बता पाऊं कि 20% या 30% गिरने का रिस्क है, तो मैंने क्या किया जिंदगी में, है ना? तो आप मुझे 20% 30% गिरने के बाद मैं आपको बोलूंगा कि हाँ भाई साहब ये बेयर मार्केट है, तब तक आपका पोर्टफोलियो 50% उड़ गया, तो क्या फायदा? कोई फायदा है?
कब तक एक्सपेक्ट कर सकते हैं?
नहीं, वो ठीक है, वो कोई एक दिन में तो होता नहीं है। बट कहने का मतलब है कि इफ देयर इज सच अ रिस्क, नहीं, मेरे कहने का मतलब समझिए कि अगर ऐसा कोई भी रिस्क है जो कि हमें दिख रहा है कि ऐसा रिस्क है, तो हम उसको बेयर मार्केट मानेंगे। और फिर वो होता है कितने टाइम में होता है, वो हमारा डे टू डे काम है ना, हर दिन देखना, सोचना और करना।
जैसे लास्ट 1 ईयर से कंगारू मार्केट है, तो ये ट्रेडिंग और ये जो गेन मार्केट में जो शेयर्स डबल हो रहे हैं, ट्रिपल हो रहे हैं, वो अपॉर्चुनिटी तो चली जाएगी ना 1 ईयर के लिए।
ग्रे मार्केट अब मैं ग्रे मार्केट तो छूता भी नहीं हूं, तो मैं उसकी तो बात ही ना करूं तो अच्छा है।
नहीं, मैं ये कह रहा हूँ सर,
व्हाइट मार्केट की बात करिए ना, जो अवेलेबल है सामने, जो दिख रहा है।
कर रहा हूँ सर, जो अभी मार्केट में पिछले 1 साल से लास्ट जुलाई से लेके 30 अगस्त तक मार्केट अभी तक फ्लैट है, ऑलमोस्ट फ्लैट है। मतलब 18,000 तब था टेंटेटिव लेवल, और अभी भी लगभग वही है, 100-200 प्लस माइनस है। ठीक है, तो ना तो बियर मार्केट है ना बुल मार्केट है। और अगर आप बियर मार्केट एक्सपेक्ट कर रहे हैं तो एक आइडिया तो होगा ना कि 6 महीना, 2 महीना, 8 महीना।
करेक्ट। मैंने ऑलरेडी बताया कि 15 to 21 मंथ्स का बेयर मार्केट होता है। सो इफ वी टॉप्ड इन अक्टूबर ऑफ 2021, 15 मंथ्स गोज अप टू मार्च ऑफ 2023।
मतलब है कि ये बियर मार्केट चल रहा है।
हाँ जी, ये चल रहा है, आप उसको कंगारू बोल लो, कोई उसमें दिक्कत नहीं है, क्योंकि बेयर मार्केट में भी ना मार्केट क्या है, 1000 पॉइंट गिरता है, 1000 पॉइंट बढ़ता है। अब आप इस समय पे ऐसा हो रहा है कि वो जब 1000 पॉइंट बढ़ रहा है तो इट इज रिट्रेसिंग 80-90%, तो आपको लग रहा है कि गया कहीं नहीं है, तो दैट इज व्हाई यू आर कॉलिंग इट अ कंगारू मार्केट, विच इज फाइन, विच इज कंप्लीटली ओके विथ मी। अगर वो डाउनवर्ड चैनल होता तो हम उसको बेयर मार्केट बोलते, बट पॉइंट ये है, मैं बुल मार्केट कब बोलूंगा, जब मैं सिर्फ तेजी करूं, हर डिप पे मैं सिर्फ तेजी करूं, मंदी करने का सोचूं ही नहीं। जब ये ऐसा बाजार हो गया जब मैं तेजी भी करना है और फिर 2 महीने बाद मंदी भी करना है, मुझे बोलने तो दीजिए, रुकिए फिर आप बोलना, मुझे बोलने दीजिए फिर आप बोलिएगा।
बोलिए।
जब हम ऐसे मार्केट में जहाँ पे 2000 पॉइंट ऊपर जाता है वो भी मैं पकड़ूं और उसमें भी मजे करूं, और 2000 पॉइंट गिरता है उसमें भी मजे करूं, और इसको पकड़ने की क्षमता रखूं, तो इसको मैं बेयर मार्केट कहूंगा। दिस इज माई डेफिनेशन ऑफ बेयर मार्केट। और इसमें आखिर में ऐसा होता है कि एक पैनिक पॉइंट आता है जिसमें कभी कभी ज्यादा ही गिरावट आ जाती है, जो कि एक रिस्क है इस लेवल पे। तो मेरे कहने का मतलब है कि वी आर नॉट आउट ऑफ दिस कैंगरू मार्केट, एंड देयरफॉर द रिस्क इज यू आर स्टिल इन अ बेयर मार्केट।
तो सर जैसे 16200 से तो ट्रेंडिंग मार्केट है, अगर मैं आप ही की बात पे बात करूं,
15200 से ट्रेंडिंग मार्केट है।
15200 तो चलिए ठीक है, नहीं मानेंगे क्योंकि प्राइजेक्शन 16200 पे ही ट्रेंड चेंज हुआ है, चैनल का ब्रेकआउट हुआ है 16200 पे।
नहीं, वो तो आपका चेंज हुआ ना, मेरा तो नहीं चेंज हुआ, मेरा तो 15200 पे ही चेंज हो गया।
अच्छा, नहीं वो मेरा तो,
और मेरा लिखित है, और मैं ऐसे ही तो बोल नहीं रहा हूँ क्योंकि मेरा लिखित है।
नहीं वो तो मेरा,
everything is written and everything is time stamped. So my point is this कि my point is what, 18,000 पे मंदी लगती है, 15,000 पे तेजी लगती है, 18,000 वापस आए, यहाँ पे फिर मंदी लगती है। दिस इज अ कैंगरू मार्केट, विल कंटिन्यू लाइक दिस।
और अगर न्यू हाई आ जाए तो सर?
आने तो दो।
नहीं, मेरा मतलब है कि वो बियर मार्केट हो गया या बुल मार्केट हो गया?
अगर मगर वाला डिस्कशन ही नहीं है ना इधर। आई एम गिविंग माई ओपिनियन, यू आर गिविंग मी अगर मगर।
अगर मगर नहीं है ना, 19,000 आ रहा है, अगर मगर है ही नहीं,
तो आने तो दो।
चलिए ठीक है,
आने तो दो। आज कहाँ है उस पे आप व्यू मैं दे रहा हूँ कि आज इधर है, आज मुझे ये लगता है, कल क्या होगा तो आपको क्या लगेगा? अरे वो कौन सा सवाल है वो?
सर कंगारू मार्केट है पिछले 1 साल से, बियर मार्केट नहीं है, मैं यही आपको क्लियर करना चाह रहा हूँ।
आपने क्लियर कर दिया, वो मैंने भी क्लियर कर दिया, मैंने उसके रीजंस भी दे दिए आधा घंटा बोल के। अभी वो आपने सुने नहीं है तो मैं रिपीट नहीं करूंगा, रिकॉर्डिंग इज ऑन ट्विटर।
सुन लेंगे वो तो कोई बात नहीं, वो तो मेरा भी वीडियो रखा हुआ है यूट्यूब पे, उसमें कोई इशू नहीं है। बट ट्रेंडिंग मार्केट तो 5 साल में एक बार मिलता है, रोज थोड़ा ना मिलता है।
नहीं मिल रहा है ना, यहाँ 2000 पॉइंट का ट्रेंडिंग मार्केट मिला, अभी 2000 पॉइंट का ट्रेंडिंग मार्केट नीचे की तरफ मिल जाएगा।
तो फिर बियर मार्केट नहीं हुआ ना सर, वही तो पॉइंट है।
You don't know whether 2000 will become 5000, you don't know that.
ओके चलिए ठीक है, फिर आपको पता है?
मुझे इतना पता है कि हो सकता है, होगा कि नहीं मुझे नहीं मालूम, बट रिस्क
नहीं
है।
होगा, मैं तो बोल रहा हूँ 19,000 होगा, अगर मगर कुछ है ही नहीं।
तो यही तो ब्यूटी है, इसी का तो आज मैंने स्पेस रखा है कि इसी डिस्कशन का। तो नाउ ओके, लेट अस पुट इट द अदर वे। यहाँ से तेजी लग रही है, ओके मैंने कई रीजंस दे दिए कि ऐसा क्यों नहीं होगा, बेस्ड ऑन लिक्विडिटी फैक्टर्स, डॉलर से लेके ग्लोबल लिक्विडिटी, वो सब फैक्टर्स को लेके मुझे लगता है ऐसा शायद नहीं होगा। और अगर यहाँ कहीं पे मार्केट कंसोलिडेट करके ऊपर की तरफ निकल जाता है, आई विल बी फोर्स्ड टू चेंज माई व्यू, इट इज नेचुरल। बट नाउ आई विल आस्क यू द काउंटर क्वेश्चन, बिकॉज आई हैव गिवन माई रीजंस। आई वांट टू नो, अगर यहाँ से तेजी लगता है तो उसके रीजंस क्या हैं?
हाँ बताए ना, पूछे
बताइए, मैं आपसे पूछ ही रहा हूँ।
डॉलर इंडेक्स अगर आप बात कर रहे हैं तो डॉलर इंडेक्स का कोई इशू नहीं है, टॉप बन गया है और डबल टॉप बन गया, आज देख लीजिएगा, कोई इशू नहीं है। 2 दिन बाद आपको प्राइस भी पता चल जाएगा। और जहां तक लिक्विडिटी की बात है, 1.5 करोड़ लॉट्स की रोज की ट्रेडिंग होती है इंडेक्स में ऑन ऑल एवरेज, जब विक्स होते हैं 22-23, और जब विक्स 17-18 होते हैं तो 1 करोड़ के आसपास रोज की ट्रेडिंग होती है। तो इंडेक्स के अंदर और फ्यूचर्स के अंदर कहीं भी लिक्विडिटी की इशू नहीं है। वर्ल्ड की लिक्विडिटी से मुझे कोई मतलब नहीं है, मेरे इंडिया की मार्केट में लिक्विडिटी की कोई इशू नहीं है। और जहां तक टेक्निकल की बात है, यहाँ पे चैनल का ब्रेकआउट हो चुका है और चैनल के हिसाब से टारगेट बनता है 19 के।
ओके
ओके
कोई
पीयूष,
क्वेश्चन है तो पूछ सकते हैं आप।
पॉइंट्स आपको लगता है तेजी है, हाँ ठीक है, तेजी कीजिए।
नहीं नहीं Chavan, that's not the answer. With all due respect, everybody has their analysis. I never disregard anybody's analysis, but I only go into the reason.
नहीं, मैं
to
अपने
me right
रीजंस
now,
दे रहा हूँ सर, मैं अपने रीजंस
नहीं
दे
मैं
रहा
भी
हूँ।
बता रहा हूँ, मैं
हाँ,
बताता हूँ निफ्टी में मैं एग्री करता हूँ, निफ्टी ब्रेकआउट दे सकता है, बट अभी तक मेरे हिसाब से, क्योंकि मैंने जो ट्रेंड लाइन बनाया है पिछले अक्टूबर के हाई से, वो ट्रेंड लाइन के ऊपर रह नहीं पाया है।
एक्चुअली सर जिस ट्रेंड लाइन को आप देख रहे हैं ना सर, वो आप पुराना वीकली ट्रेंड लाइन देख रहे हैं। वो ट्रेंड चेंज हुए काफी टाइम हो गया है। मैं आप बोलेंगे तो मैं चार्ट भी आपको ट्वीट कर दूंगा, शेयर कर दूंगा।
श्योरली,
थैंक यू।
Okay, the fact finder, you had some question. You can please unmute.
No, I just had a question for Rohit. Rohit, recently, you know, Apple started, correcting, and Apple actually touched the highest percentage of the US S&P, I think at about 7.4. Now, what do you think? I mean, what is your sense on Apple as a stock? Because at the end of the day, that's the largest weight in the index. Plus, it seems to have started going to correction mode. Your thoughts on
Apple. I only have a view on the Nasdaq index, and but I need to do that. So purely on the Nasdaq index, my measure is that you're starting wave C down. That is what I'm working with right now. So I've not really gone down to what that means for individual US stocks.
So the reason I'm asking this is because typically, if it's the largest weight in your index, then that started rolling over. Is that a sign that quality is getting sold?
Yeah, I get your point, but like I said, I haven't done the homework to answer it because I am much more focused on the Indian market. I do cover it, but once the US market rolls over, maybe I'll study those stocks and I do write about them sometimes. But 80% or 90% of our time is dedicated to the Indian market. US indices more we cover, but US stocks इधर ही इतना मजा है काम करने में, उधर क्या क्यों अपना दिमाग खराब कर रहे हैं? मैं तो ऐसा सोचता हूँ।
Okay, fine.
Why should I even invest in this happening in India? Why should I wake up at 9 in the night and know what US and silver are doing when the opportunities in India to trade and invest are so much? So this is just my approach. I avoid anything that will keep me up after 5. Once markets are closed, we should enjoy home and life. Indian markets offer, fortunately, our long-term macros and fundamentals are good. Problems are short markets. Why we? Yeah, sure.
Okay. Okay, the last question, Rohit. Okay, not sure. Vinay, you can just unmute and ask, please. Vinay?
Yeah, hello. There was some audio issue, that's why I was not getting it. Yeah, can you hear me? Yeah.
Yes, you're
we
Yeah,
hear
audible.
you.
I've been following Rohit for quite a long time actually, and I've been a fan of him actually. And recently, conviction has all more built up when he's starting disclosing his holding position also. So I just want to first of all thank you for thanks Rohit for such a beautiful insight and clarification with what he's doing. He's just giving all the things what he's doing because till now I haven't seen anyone who just comments अच्छा लग रहा है बुरा लग रहा है तेजी मंदी but no one tells who how is their positioning it there, how much long, how much not. So this part is quite. I'll just wait for the weekend to just listen what is the positioning of Rohit, so I should plan accordingly. So thank for that. And my question is regarding PSU banks. If Rohit, you can tell me something about the PSU banks, how you are looking on the longer term for 3 to 5 years, how you are looking them PSU banks especially.
Okay, I got thrown out of these spaces, so I missed part of the question. I think you asked about PSU banks. Was there anything else before that?
No, or PSU banks actually.
So if I take a long term outlook, I would actually be bullish on PSU banks. Okay, apart from whatever near term risks come with the market, I think the worst has already been priced in. Okay, the market is not really interested in that sector anymore. But at any point of time when the economy is going to roll back into growth mode, I cannot imagine why their books will not again expand and not do well. You can probably pick the best out of it, but I think that is the worst is done there. That is my short take.
Okay.
Okay, thank you.
Okay, Rohit, with this, let's wind up for today. Thank you so much, everyone, for being a part of this Twitter space. We'll catch up next time. Thank you. Thank you, Rohit.
Yeah, thank you.